however, by lower tractor volumes, whereas Maruti has seen strong volumes in Q2. So that's what we are seeing as far as auto numbers are concerned.
And Pranay, what's the street expecting from the rest of the corporates? Oil and gas, metals and cement companies, they seem to post weak numbers.
Well, it has been a painful quarter, and it has been so for a long while as far as these cyclicals are concerned. Starting off with oil and gas, you talk about refiners, a lower GRM is expected this time around. Big inventory losses are also expected because the kind of crude fall that we've seen not only on a sequential basis but also on a year-on-year basis. Having said that, if you talk about explorers, that's the upstream division, counters like ONGC, OIL as well as Kane, and also the exploration business of Reliance Industries, you are looking at muted earnings because crude has taken a hit on a sequential and a year-on-year basis, so crude realizations are expected to be lower. So net realizations for your PSUs like ONGC and OIL are expected to be somewhere at around $48 per barrel. Also interesting would be to watch out for the subsidy sharing number for ONGC as well as OIL, the upstream counters. Move on to metals, and as has been the case for the past several quarters, it is expected to be a weak quarter this time around as well because of the steep fall in realizations, and we know that there's a huge disparity and skewness between the realizations fall as far as the end product is concerned and their raw material cost, that is iron ore. Both have fallen, but the end product has fallen by a much more greater quantum. Having said that, the safeguard duty has been imposed, but that came possibly at the fag end of this quarter, so the complete benefit of it is likely to be seen in the third quarter onwards. A marginal benefit of that might be seen, but having said that, realizations, the top line as well as margin deterioration is expected. We know that all these companies have been sitting on high debt levels as well, and interest cost has been an overhang for these on the P&L, affecting the bottom line. That also is likely to play out. For miners, aluminium as well as copper have seen a shaving off as far as the LME prices are concerned. So some bit of an impact also is expected there in terms of realizations for companies like Hindalco and Vedanta. Lastly, talking about cement, we know that it's traditionally a weak quarter because it has been the monsoon quarter. In line pretty much with that, Kotak's channel checks indicate that the demand remains weak across markets. There's been absence of volume growth, and that is likely to weigh on the quarterly earnings. If you talk about pricing, is expected to be higher on a sequential basis, although marginally by on an average around 5 to 12 rupees a bag. So it'll be interesting to watch out how all these sectors and their earnings pan out for this quarter.
All right, thanks for that, Pranay. Let's also tell you what some of the stocks are this morning that are making news. Hira, let's start with you. What's on your list this morning?
Thanks, Ananda. To start off with, firstly, we have Kane India that will be in focus, as reports are suggesting that the government is seeking higher revenue share from Kane India's Bama hydrocarbon block, and additionally, it is expected as precondition to extending the production sharing contract by 10 years to 2030. We have Tech Mahindra that will be in focus, as they've tied up with Transport System Catapult for intelligent mobility solutions.